Hello friends and welcome to my channel Simply Stocks, and today I'm going to talk about Ramco Cements, which have come out with very subdued numbers. So let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Ramco Cements, I have a small request. Can you support me on Patreon? Once you do that, help me grow the channel, help you also ask me questions and seek out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, you can pay $100 upfront. You get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot get the Patreon membership, you can get the WhatsApp yearly membership if you can email me. Now about the company. It is the leading mid-cap cement firm headquartered in Chennai and is prevalent in South India. Mainly it is prevalent in South India, very less in probably West or North India. The market cap of the company is around 17,000 crores at the moment and hasn't done much in the last 12 to 15 months or so. It produces Portland cements, ready-mix concrete and dry mortar products. Uh, also sells electricity produced from windmills and thermal plants, but it is a very less business of its. There's decent dividend payout and current total production capacity is around 17, you can say megaton per annum, metric ton per annum. If you look at the numbers, these are Q2 numbers. So the market cap of the company, as I explained, is around 17,000 crores. Sales has been around 1800 crores. It is trading at the moment at around a 2.3 times sales. The sales were up around 20%, but profit dipped remarkably from around 500 crores to around 4 crores at the moment. There was a tax credit of 239 crores. It was last year, so if we take that out, profits were around 200 crores, but even from 200 crores profits to dip to 4 crores, that tells you a lot about margins. Margins have shrunk from around 22% all the way to 10%. ROE of around 11% is also halved, has also halved over the last 1 year or so. So things are not looking that great for the company. The business has shrunk over the last 12 to 15 months. In terms of the performance, raw material costs have hurt the numbers, and the cost have went up sharply over the last 12 15 months or so, mainly because of the war situation in Europe. The European turmoil, as we are seeing in Russia and Ukraine, has not helped most commodities at the moment. Prices have gone up sharply for raw material as well as the commodity itself, and numbers have remained volatile over the last 2 3 years for the company. There's low dividend payout, strong domestic institutional holding of around 12%, free float is there. So there is large investors invested in the company, but the performance of the firm has not been that great. Increasing debt is also a major worry for the company. If you look at the technicals, this major supports lie that around it is around 640. So long-term supports lie around 640 levels. Short-term support is around 680 levels. So if 680 gets broken, we are headed towards 640 and then even 580. I think it will become strong technically on a short-term basis only above 750 levels. So I would say avoid as a short-term trade unless it takes out 750 and trades above it for a decent period of time, and look for upsurges to exit if bought for short term. If you bought it for short term, any upsurge of 3 4% any day, you should exit it, take the losses and move on to other sectors, other companies. It looks weak on short term charts. So my call on the stock is that if you have it, then hold on to it if you are buying it for the long haul, because cement sector will revive over a period of time and there will be a surge in all cement stocks probably for a quarter or so, and that will be a big opportunity for you to book profits. But for short term, it doesn't look that good, and I think mid caps, at least mid caps in the cement sector, should be avoided from a short term point of view. It is more of a commodity trade, and when you think that it is at they are at abysmal levels, then you get into it, and then when the surges happen, then you exit. The company is just similar to what happens in metals, etc. So keep relevant stop losses once you get into these companies all together, and avoid trading in it unless it goes past major short-term averages. As I said, 750 is a major support for the company, for the stock. So about major resistance. So once it takes out 750, 770, that's when you should get in from a short-term point of view and put only 5% of your total holding into such stocks. So this was a video on Ramco Cements. Please like and subscribe my channel. Hit the bell icon so you get my video straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.